CoreWeave jumped 10.87% on Friday. The stock closed at $102, driven by a multi-year agreement to power Anthropic's Claude Han models. Trading volume hit 78.7 million shares, 190% above its three-month average. The headline read, "AI infrastructure demand is real. The market is pricing it in." And the company that IPO'd just last year has already grown 155%. On the same day, CoreWeave announced an expanded capacity deal with Meta, running through December 2032. Two major contracts in 1 week. Investors cheered. But there was a second announcement buried inside the same press release. CoreWeave said it would raise $3.5 billion through a convertible debt offering. Not equity, convertible debt. The company that the market just rewarded for signing AI's biggest names is not generating cash. It is borrowing $3.5 billion to keep the lights on, while it builds the infrastructure those contracts require. The market narrative on Friday was clear. CoreWeave wins because Anthropic wins, and Anthropic winning means AI demand is structural, not cyclical. That's the surface read. Follow the money further, and the picture shifts. CoreWeave's business model requires massive upfront capital to build GPU clusters before a single dollar of contract revenue arrives. The Anthropic and Meta deals are long-term, meaning CoreWeave must fund construction now and collect later. The $3.5 billion convertible issuance is the funding mechanism. Convertible debt holders lend at a fixed rate and retain the option to convert into equity if the stock rises. If CoreWeave delivers on the contracts, bondholders convert and capture the upside. If it doesn't, they hold senior claims ahead of equity shareholders. Either way, the debt investors structured a position with asymmetric protection that common stock buyers do not have. There's a second layer. Powering AI data centers at CoreWeave scale requires enormous amounts of electricity. That electricity increasingly comes from natural gas. SoftBank is building a 9.2 gigawatt data center in Piketon, Ohio, with a $33 billion dedicated gas plant. Entergy Louisiana is constructing 7 new gas-fueled plants for Meta. Kinder Morgan, Energy Transfer, NextEra Energy, midstream operators, are signing 20-year supply agreements with these facilities. The Alerian Midstream Energy Select Index carries a 4.7% yield as of April 9th. PJM has targeted 15 gigawatts of new power capacity to feed data center demand. The energy infrastructure sector is capturing a revenue stream that doesn't show up in any AI company's earnings report, and it's locked in for decades. CoreWeave's stock moved. The pipelines feeding its data centers barely flickered. That's where the structural revenue is.
The winner swap only holds under one condition. CoreWeave's contracts remain fixed fee and long duration. If AI model providers, Anthropic, Meta, begin shifting workloads to in-house silicon or competing cloud infrastructure, CoreWeave loses its anchor revenue before the debt is repaid. Microsoft closed down 0.59% Friday, while CoreWeave rose 11%. That spread reflects the market pricing CoreWeave as an independent infrastructure play, not a commodity compute provider. If that independence narrative cracks, if Anthropic's next generation of models requires hardware CoreWeave can't supply, the convertible debt structure becomes a ceiling, not a floor. The energy infrastructure thesis is more durable. Natural gas pipeline contracts for data centers are typically 15 to 20 years. They don't reprice with AI model cycles. The PJM 15 gigawatt target represents committed demand that exists regardless of which AI company wins the model race. That cash flow is less exciting than a CoreWeave 11% A, but it doesn't require $3.5 billion in new debt every expansion cycle. The weight of evidence tilts toward energy infrastructure as the more structurally sound beneficiary of the AI buildout, but that thesis only holds if U.S. power grid constraints remain unresolved. If federal permitting reform accelerates grid expansion and utilities can handle AI load without dedicated gas plants, the pipeline premium compresses. The benchmark to watch, next week's PJM capacity auction results, and whether CoreWeave's convertible offering prices above or below its current conversion premium. If the offering prices poorly, the market is telling you the debt structure is more expensive than the stock move implied.